Hi grade 12s, and welcome back to another video of companies analysis of published financial statements. So in the past few videos and in the videos for companies analysis and interpretation, I spoke to you about the ratios. We spoke about what they show and what an increase or a decrease would result in. And then I told you that I would then tell you about the formulas. Now, there are many formulas and you have templates for those formulas. And also the lucky thing that you also have is at the end of each of your exam question papers, the last page is a formula sheet of the most important formulas that you need to know and remember and be reminded of. The only gag though is the fact that they don't tell you which ratio it is. So they will say, okay, I'll show you. Like if you look at my board, you'll just see this portion of the formula, which is the gross profit over sales times 100 over 1. They won't tell you that it is the gross profit on sales formula or that it is the gross profit on cost of sales formula. That's stuff that you have to realize. It's basically like a trigger for you to be able to see it and then think, oh, this is the formula for that, right? So I'm just going to go over the profitability formulas and how to sort of trick it in a sense. And that is the only set of formulas that I'm going to go over. Then you will go over liquidity formulas by yourself. You will go over solvency formulas by yourself. You will go over financial gearing and risk formulas for yourself, because it's really just straightforward. It's formulas that they give you. The perfect thing as well is the fact that all of these formulas can be found in your material, and also that they're just written in order. You know what I mean? It's everything that you need to know, plus the explanations as well in detail. So let's just get started. The first profitability indicator is the gross profit on sales, right? And as you can see, it's gross profit over sales multiplied by 100 over 1. This is to make it the percentage that we need in our end result, right? And then we're going to go into gross profit on cost of sales. I just abbreviated that, but that is cost of sales, so COS. And the calculation is gross profit over cost of sales multiplied by 100 over 1, or it can just be 100, right? And this will give us the percentage that we need, right? The next indicator is the net profit margin. And the net profit margin is calculated as net profit over sales multiplied by 100 over 1. And this will give you a percentage once again, which is our final resulting answer. Then there is the operating expense on sales, right? Which is operating expense, which is operating expense divided by sales multiplied by 100 over 1 to give us our resulting percentage, right? This all happens after the preparation of financial statements and final accounts and notes, because all of the information you need is basically a copy and paste, copy and paste, copy and paste. And this is very important to do, even if you find that your answer is a little bit weird. So let's say you have an amount for gross profit and an amount for sales, and then you multiply and you get like a negative 0 point something percent or 100 and something percent. It's important to keep it that way because you get method marks in accounting. You know this now. By now you know this. And so you need to make sure you take the digits and the amounts from your statements, transfer them to the calculating of indicators, so that at least you have the mark for knowing where to get the amount, right? So another thing that I was saying, we'll look into how to trick or sort of remember the formulas, right? For profitability, it's really cool. Where it says gross profit on sales, it is literally gross profit divided by sales. Where it says gross profit on cost of sales, it is literally gross profit divided by cost of sales. So it's basically a thing of, if you ever catch yourself forgetting the formula, then you can just look into the name of the ratio or the indicator and then try and find a way to think of what could be the formula, and then look for what seems similar in your answer sheet or your formula, in your formula sheet, in fact, actually. So the next thing that we're going to do is going into practice and how to use these. But quite simple, it's quite simple, as you can see. You'll have to calculate gross profit, obviously, and you know the formulas for this is stuff that I'm not going to go back with you for, because if you're in grade 12, you know how to calculate it. You know how to, you know that you find your sales in your income statement, your cost of sales in your income statement. You know that you find your net profit at the end of your income statement. Your operating expenses will be there in your income statement as well. And so obviously, because our income statement, then you know, actually that's the perfect thing, then you know that if it focuses on profit, then it obviously means most of our information is going to come from our income statement. Right? Things like liquidity, right? We know that if it has to do with short-term loans, long-term loans, how much we can pay off for a specific amount of time, then we think of, okay, then it means we're looking into liability, we're looking into assets. Then that means we're looking at our statement of financial position. If we're looking into shareholders' equity, that ratio that we spoke about, and we're looking into returns, we know that, okay, so we're focusing on how much our shareholders are going to get. So we know that we look at the statement of, the statement that has our shareholders' equity. So our statement of shareholders' equity, right? So you know that it basically is a thing of, I think in school, we tend to think that each topic is separate and each piece of information stands alone. And it's really not like that. Everything flows into each other and everything is linked and correlated. And so when you think about these things, think about the other things you've learned as well, right? And so in the next video, I'm going to do examples for the profitability area of analysis, and then we're going to see how we do with that and how easy it is, because it really is easy. The point is a really easy point of your exam after you've done your tedious financial statements, which are also easy as long as you practice, because accounting is a practical subject. Other than that, thank you so much for watching. Thank you so much for tuning in. I hope that this helped you, and I hope that this is going to make your studying process much easier. And yeah, I hope you have a good day. Thank you and goodbye.